Hey guys, today we have a lot to talk about concerning the latest Nvidia earnings report, which further solidified the company as one of the most valuable and important corporations in the world for the future to come. We are going to break down those earnings and what they mean for the future of Nvidia, and hopefully explain why I think Nvidia is a solid investment to make. Quickly, before we start, let me extend an invitation for you to join our Discord. We have tons of day trading alerts, long-term investment material, and an ever-growing community. I will leave the link in the description and the comment section. Let's begin by going over what happened today. Nvidia, the dominant force in AI chip technology, announced its quarterly financial results on Wednesday, underscoring its position as a major beneficiary of the AI boom. Nvidia soared and exceeded expectations beyond top and bottom lines. Expectations with revenues and non-GAAP EPS coming in at $22.1 billion, which is up more than 265% year over year, versus the estimated $20.6 billion that Wall Street expected. The EPS came in at $5.16, which is up more than 486% year over year, up from the Wall Street estimates of $4.64. The outstanding performance was primarily driven by the data center segment, which is witnessing a significant surge in demand for Nvidia's AI GPU chips due to generative AI applications. In the fourth quarter, Nvidia's data center revenue achieved a new record high, reaching $18.4 billion, marking a growth of over 409% year over year and more than 27% quarter over quarter, versus the estimated $17 billion as large cloud infrastructure providers, which are the primary customers, tech startups, and enterprise customers race to implement generative AI and large language models across their businesses, causing sort of a gold rush for Nvidia's AI GPUs. The company highlighted strong demand for its products, projecting continued sales growth. Over the past 18 months, Nvidia has experienced remarkable growth driven by the popularity of its specialized and high-end semiconductors, crucial for training cutting-edge AI services like OpenAI's ChatGPT chatbot. The company has emerged as a key player among the Magnificent Seven tech stocks, alongside giants such as Amazon, Apple, and Microsoft, contributing significantly to the stock market's performance. Nvidia's market value has surged to $1.7 trillion, marking it as one of the most valuable public companies globally. Despite concerns over its valuation, the company has consistently surpassed analysts' growth expectations, leading to substantial stock market gains. In its latest financial report, Nvidia revealed that its fourth quarter revenue more than tripled from the previous year to $22.1 billion, with profits increasing almost ninefold to $12.3 billion. The revenue surpassed both the company's own forecast and Wall Street estimates. The company anticipates further growth, forecasting revenue of around $24 billion for the current quarter, reflecting a significant increase from the previous year and surpassing analysts' predictions. Nvidia's CEO, Jensen Huang, believes that the transition to upgrading data centers with chips essential for training advanced AI models is still in its early stages, estimating a need for approximately $2 trillion to equip buildings and computers with Nvidia's chips. He emphasized the increasing demand for accelerated computing and generative AI technologies globally. Despite concerns about its high share price, Nvidia's strong position in AI-related intellectual property, backed by years of strategic investment, sets it apart in the industry. The company's revenue growth is also supported by its production partners, particularly Taiwan's semiconductor manufacturing company, which has enhanced the supply of Nvidia's flagship AI chips. While Nvidia faces competition from cloud computing giants developing their AI chips and rival chip makers entering the market, the company continues to innovate. Intel, a dominant player in standard microprocessor chips, is also exploring opportunities in AI chip manufacturing, aiming to expand industry capacity. So knowing how strong Nvidia is at the moment, does it make sense to buy it at the moment? This is a very difficult question to answer given the stock price and valuation have both skyrocketed. Jonathan Weber says that Nvidia is experiencing a surge in demand for its products, showcasing strong fundamentals with high margins, returns on capital, and a robust balance sheet. However, uncertainties loom regarding the future growth of Nvidia's AI data center chips, which currently drive the company's growth. Competition, notably from companies like AMD, poses a potential challenge in the coming years. At the current after-hours share price, Nvidia's earnings per share estimate for the fiscal year stands at $21.51, resulting in a 34 times earnings multiple. Should Nvidia sustain strong growth in the future, this valuation could be justified. Compared to other top stocks like Tesla and Apple, Nvidia appears relatively attractive in terms of valuation and growth prospects. Nevertheless, a high earnings multiple of over 30 times could be risky if growth slows down significantly. The decision on whether to invest in Nvidia near its all-time highs hinges on the long-term outlook for AI chips. If market growth continues beyond 2024, Nvidia's current valuation may be justified. However, a slowdown in growth, possibly due to economic factors, could make the current valuation of over 30x earnings and around 19 times to 20 times sales seem excessive. Ahan Vashi says that given Nvidia's robust financial performance and management's optimistic outlook, I don't think investors, institutional or retail, are going to be in any hurry to race toward the exit doors here. However, vertical moves like the one we see in Nvidia tend to get retraced, but only time will reveal the truth here. Nvidia Corporation is a great company with market-leading products and arguably the best CEO in the semiconductor industry. However, the price we're being asked to pay for Nvidia is too steep, in my opinion. In a zero-interest rate world, investors can afford to be valuation agnostic. However, we are no longer operating in such an environment, with the Fed still pulling liquidity out of financial markets and a bank credit tightening cycle in effect after multiple bank failures. Despite running the risk of missing out on further gains in Nvidia stock, I choose to remain on the sidelines here. He says that while Nvidia is performing exceptionally right now, the current price tag leaves little to no margin of safety for a long-term investor. These thoughts are not exclusive. The market overall is kind of uncertain about how much more could Nvidia rise. In fact, a lot of the reason why markets pulled back so much this week has been the anticipation of Nvidia. There are a lot of people that believe that though the company is performing really well, its valuation is exaggerated. Others believe that Nvidia's results have warranted such valuation and much more. As such, it is clear to me that there are a couple of ways to approach the question on how to invest on Nvidia. If you are super risk-avert and don't want to buy Nvidia with fears that the stock will go down, but also don't want to miss out on it rising up, consider loading up on an ETF that holds a lot of holdings in Nvidia. This kind of approach will allow you to diversify the overall risk while still being exposed to the company's success. On the other hand, if you want to buy Nvidia but aren't all that certain about it, I would consider either buying fractional shares of Nvidia or even better, buying the Direxion Daily NVDA ETF. This ETF tracks Nvidia, but it's significantly cheaper at $43 at the moment. I highly recommend investors that are now starting to consider Nvidia as a potential investment to approach it carefully, to not YOLO thinking this is going to triple in valuation by next year. You want to pace yourself in this investment and buy at a controlled manner. Nvidia is definitely going to be in an important position for years to come, and the investment on it is very sound, but a lot can happen in between a couple years and now. So buying while it's at its peak should be treated incredibly carefully. If you haven't already, go ahead and watch my previous video where we talk about TSM. Nvidia largely depends on TSM, and I believe now more than ever that once their current contract is up and ready for renovation, TSM will significantly raise its price for chip manufacturing with Nvidia. On top of that, I am currently doing a lot of research into Intel. I believe they are also poised to see significant growth in the coming months. With that said, don't forget to like the video and join the Discord. We have so much content there free for everyone who joins. Let me know your thoughts down in the comments below. I hope to see you on the next one, to the moon.